Good morning, everyone. Today is September 26th, Monday. Everybody's been talking about the strength of the U.S. dollar and how it could potentially disrupt global markets in a big way, particularly talking about the British pound, the collapse of the British pound recently, which I want to touch on briefly. Ideally, I want you to focus on what I call the appreciation-depreciation cycle phases that take place. I've warned about this for many years, well over 6-7 years after I found these depreciation cycle phases, and I was looking at primarily the charts that I'm showing you right here. They're very clear. In fact, I have a custom index that highlights these even better. But in this case, I wanted to show you the dollar index, which is the upper chart, and the SPY, which is the lower chart. And I've highlighted the appreciation cycle phases here in green, and the depreciation cycle phases here with the red bars. Every time we shift, these are roughly 9.5-year cycles. Every time we shift, given and depending upon what's taking place in the world and what's taken place with global central banks, particularly the U.S. Fed and the European central banks, we've moved into various stages of decline with regards to the U.S. dollar. So you can see here in 1980, through the peak up here, in 85, which was the highest interest rates, very high inflation. We had a very strong peak in the U.S. dollar at the end of an appreciation phase, right here in 1984. The beginning depreciation phase was a destructive cycle where assets devalue, the dollar devalues, and it's basically a destruction of demand. It's a destruction of an excess phase peak that takes place during the appreciation cycle phase. So now, at the end of the depreciation cycle phase, we move into a new appreciation cycle phase where the U.S. dollar typically bottoms out and tries to flail around, depending again on what's happening with the central banks and inflation. And then eventually the U.S. dollar will begin to rally out of this as appreciation in U.S. assets, stocks, becomes more prominent. The U.S. dollar strengthens because everybody becomes optimistic in an appreciation cycle phase. And you can see this was the technology boom that took place, the dot-com bubble. It rallied up the U.S. dollar to about a 121 area. And then we moved into an early stage depreciation cycle phase. Now understand that this was a bursting of an excess phase related to the early internet cycle, as well as the September 11th terrorist attacks, which moved the global market into a very tenuous position. The U.S. dollar detrended, moved downward all the way through 2008 and 9. And you can see here during this depreciationary cycle phase, during the bottoming of the market back over here, the U.S. dollar actually showed strength. Why did it show strength at this point in time? Because the Federal Reserve moved into an easy money policy, addressing the concerns that were taking place in the global markets and printing money. This was the initial base and bottom that took place in the U.S. dollar back in 2009, 10, 11, and it took well into 2014-15 before the U.S. dollar began to appreciate. So we move into the current phase, which is the current depreciationary cycle phase, which started basically around December 2019, and you can see that we've had this depreciationary phase here because of COVID with the U.S. dollar. It initially moved downward, then we went into a hyper-extended rally phase where inflation shot up, global central banks kept printing money, everybody was looking for that spark coming out of COVID, and you can see that the SPY took off as well. So we have to look at it from a cycle of, now if I were to move back over here and recycle this to a auto fit scale, you can see here the end of this cycle phase also prompted a very strong rally in the U.S. stock market, and it rallied up almost 130% from the middle, the bottom of the U.S. dollar to the upper cycle phase, then continued to rally from this level during the depreciationary cycle phase from approximately here to here, which is another 80-some%. So from the total if we look at the absolute bottom back over here in the US dollar, through the entire cycle phases, we have a move of approximately 480% upside rally. Now, as we come over here and we look at the bottom of the US dollar cycle phase to the peak of this cycle phase, we have a rally mode of approximately, trying to do this for you guys live, and that's during this appreciation phase, 260%. Now, of course, during the current cycle phase, which is this end of cycle phase, we look for the dollar low right here. We look at where the stock market is right here. And we look towards the end of, which I'm not going to be able to get there, of this cycle phase, which is up over here, pre-COVID, you got 139% rally phase during this cycle. Now, where we're at right now, and depending on where the US dollar bottoms, if this is the bottom, and we continue to see extended cycle phases going forward, we could see a rally phase from this level here, from this actual bottom, I'm going to guess at about an 80% to 90% rally phase. We could see the SPY up above $8,000 before we reach this period here, which is the end of the appreciation cycle phase. Vertical line right here, so somewhere in this area, we could see the SPY move above 8,000 on a broad, broad rally phase somewhere over in here, based on my interpretation. So everybody's talking about how the global markets may collapse, how currencies may collapse, how the world may come to an end. Doom and gloom, doom and gloom, doom and gloom. What I'm trying to tell you right now is what's happening is we're in a depreciationary cycle phase. The U.S. market is raising interest rates. This is forcing the credit debt issues throughout the world to become more prominent. It's very easy to borrow money at 1 or 1.5% and try to make 10 or 11% on it when commodity prices are low. And you can make 10 or 11% off of borrowed money at 1 or 2%, but it becomes much more difficult to borrow money at 8.5%, where commodity prices are double or triple, energy costs are double or triple, and you're not making 11% anymore on that money. You're maybe making 6% on that money. So understand, if you're borrowing at 8% and you're maybe making 4 to 6% off profit off of what you would borrowed at 8%, and or you've borrowed a ton of money at 1 or 2%, and you need to roll that over into new 7, 8, 9% debt instruments, this becomes a great unwinding of excess capital, which is what's likely going to continue to take place throughout the global markets. I have warned that China, Asia, Europe, Africa, and South America are very big risk factors for the next global crisis event. And what's going to happen, in my opinion, is the US dollar is going to continue to try to strengthen. Let me come over here. Continue to try to strengthen, possibly move up to the 120 area, maybe back up into the 130 area, flail around over here until it decreases and eventually moves down into a cycle phase, which could put us back down into the 80 area, depending on what happens. Now, ideally, we have a couple of areas up here we need to watch for the dollar. Obviously, this low that has historically been kind of a base area for the dollar is very critical to see if this holds up. We also have these areas back here, which is the basing bottoming area going forward, the US dollar back here in 2012, because with all the money that's been printed, with all the capital that's out there, and with what is likely to happen, the US dollar could move into a channel, could move to something along the lines of this type of a channel, moving upward over the next 10 years and possibly try to stay within, let me try to draw this, within this type of a channel. So hypothetically, these lines are a bit overzealous. If I were to redraw that, it would be something along the lines of up to 120, maybe up to 130, 129, rolling over, finding some support, possibly rolling downward, and maybe rolling into this area before bottoming out and starting the new appreciation cycle phase. The new appreciation cycle phase would likely see the dollar move into some sort of a sideways trending, kind of like this, around this support level, eventually before breaking out and trying to move higher. And that would likely come in an area somewhere around, I would guess, 2030, 2031. So I'll draw that like this, kind of telling you that somewhere around this area, the US dollar will likely try to start a new uptrend after everything has been kind of washed out, and maybe not that aggressive, somewhere around like this, into the new depreciation cycle phase. So there you go. I want you to be aware of the fact that everybody is doom and gloom right now. The reality is the SPY is in a cycle that is a depreciationary cycle phase. The U.S. markets or the U.S. dollar is the strongest economy because after 2008, back over here, we have changed the way we handle our internal banking and preparedness for crisis events. The crisis event right now is likely global. It's likely taking place because of excess capital functions that have taken place since 2009, 10, 11, 12 in the global market, and it's going to be a broad unwinding. Eventually, the dollar will peak. It will move lower. It will reset a new structure. This is the area where emerging markets and global markets will suddenly start to bottom and look very, very attractive. And we're going to have a lot of opportunity going forward. When everything settles into this new appreciation cycle, 2029 to 2031, we are going to be in for another big rally phase, in my opinion, going forward. So understand, there is no doom and gloom. What's going to happen is a moderately ordered unwinding of the most at-risk currencies in the most at-risk nations. And I want you to be aware that there is very little risk for a global doom and gloom type of collapse. What will likely happen is some sort of a debt reset, very similar to what happened in Greece and Russia and other nations that have gone bankrupt. It just basically wipes out their past debts. They reorder, restructure, because no one, the world, let me rephrase it, the world is now one big economy. The only way the global economy is going to move into some sort of a doom and gloom environment, which would force a reset, would be if more than 1/3 to, let's call it 1/2 of the population suddenly disappears. If that's the case, then we have a serious problem with economy, with GDP, with output, with services demand, and we would see a very big collapse if somehow the world's population suddenly passed away. And that's again, I want you to understand, the long and short of these cycles is that we're in the midst of a depreciationary cycle phase, very similar to what happened back over here, and even more so extended because this was a period when the Federal Reserve was actively tightening interest rates, trying to get rid of inflationary trends. This is a period where they're doing the same thing. We're going to see how far it goes. In my opinion, is the 120 to say 124 level is probably a peak level for the dollar, simply because we've printed so much capital throughout the world. We're at a totally different environment right now, and everything will eventually move into a dampening wave cycle, which will more than likely end up in this range out near 2025, 2026. We'll probably see the dollar in the 100 to 88 level, trying to find support. All right, guys, that's it for now. I just wanted to clear things up so you don't freak out. Thanks a lot. Talk to you later. Follow my research on Twitter, by the way. Follow all of my research. It's very important that you understand what's going on so you stay away from these doom and gloom guys. Now, I will, lastly, try to add gold because I want you to see on a new pane that gold has typically done very well during these cycle phases as well. So gold, after this huge influx of inflation, you can see here that gold rolled downward and really didn't bottom until we entered this new depreciation cycle phase after the dot-com bubble burst. This was a period of extreme calm after these extreme pricing inflections. But now understand that we had gold really rallying back over here. I mean, a huge rally. And we had gold rallying here, huge rally that took place. Now, what's likely to happen back over here, where we're at right now, given the fact that we're at these huge inflationary cycle phases? We've seen this peak in gold during a appreciation cycle phase, and we saw this peak in gold happen during a depreciationary cycle phase. I'm betting, well, I think, I don't want to say it as I'm betting, but I think that gold is going to migrate around a base level and eventually start to move higher once we move later into this depreciation phase. Let me move this. So when the dollar comes down, that's going to push gold into higher trending. So at this point, gold's going to migrate upward, and then gold's really going to start to take off back over in this area. Depending on what happens, the dollar could flatten out, dollar could break down a little bit before it finds some support, and that'll prompt a fairly big move in gold, which could drive gold well above $4,000 or $5,000 an ounce. It's just appreciating within a channel that is extremely clear to me. I don't know how else to state this, is there is big talk of global excesses, and when we move into a period where the world is worried about global excesses and the unwinding of global capital, what happens with gold as we enter into this broad channel, this very broad channel moving higher? A great collapse of, say, at-risk countries, and I mentioned China, Asia, Europe, Africa and Asia, or South America, could push gold up to extreme levels, still while the U.S. stock market is climbing. Because remember, the U.S. market is relatively immune to some of this. We still have our own issues, we still have our own concerns, but it's relatively immune from whether Ghana or whoever runs into economic concerns. We're in the depreciationary cycle phase, but right now the strength of the dollar is because foreign assets are moving into U.S. dollar-based assets. That will likely continue to strengthen the U.S. dollar-based stock market moving forward, but we need to watch fear, which is why I'm telling everyone, watch for the foreign currencies. Watch how debt issues and credit issues unwind over the next 6+ years. All right, guys, sorry it's a bit long. Follow me on Twitter, follow me on YouTube. Join my free ment.com site so you can get all of my updates and see what's going on. I've been doing this for a long time, and I want you to be aware that it's very unlikely that the doom and gloom scenarios that everybody's talking about are going to play out. Yeah, it could get a little wonky, but I don't see any doom and gloom in the near future.